What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. My dividend investing strategies are free for you, so I'm just letting you know. Subscribe and hit the notification bell so you don't miss future videos with my dividend investing strategies. I have a $100,000 dividend portfolio right now. Things are looking really smooth. I'm going to show you my progression with some of my real estate investment trusts that I have in my M1 Finance Pie. So as I continue to grow my dividend portfolio, I'm going to show you how things are looking right now. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my dividends right now. Looking at my $100,000 dividend portfolio, I've made a total of $14,868.70. I started like literally July 4th or 5th of 2019. My market gain is $4,610.40. So the thing is, the market's still wishy-washy, and I've been capitalizing on real estate investment trust as well as financial sector stocks because they have not done well since the pandemic. So I'm going to review two of them very quick, but I want to show you how much I'm making right now that I have into my main section on my M1 Finance dividend portfolio. So in my section storage area with $5,755.78, there are some REITs in there, American Tower, Innovative Industrial Properties. I'm not including them. Altria, actually, I earned a total of $236. Kind of had to really think about this, and I just re-added them. I'm going to explain to you my rationales. I know I literally just had a video that I'm not going to buy Altria and Philip Morris stock, but smoking is a choice. I'm against smoking. If they go to zero, I'm totally fine with that. I mean, it's a sin stock, and again, it's a choice. And I'll have to explain to you why. I don't know if the dividend's safe in the long run. I'll go over that. But I did re-add Altria. So since I started this dividend portfolio, I made a total of $236. So VICI Properties, I made a total of $171.13. Gaming and Leisure Properties, $135.87. National Storage Affiliates Trust, $103.74. CubeSmart, I made $93.49. NNN REIT, I made a total of $47.46. Getty Realty, $33.89. Essential Properties Realty Trust, $29.86. Invitation Homes, $7.07. I just started buying them as well. So I want to go over two real estate investment trusts that kind of excite me a little bit, and I'm glad that I bought them. If you watch my previous video, I did add REXR. I provide my rationales with that one. I want to go over really VICI Properties, which has been really hot, and right here, the EPRT, Essential Properties Realty Trust. So let's go over those two REITs. With VICI Properties, they're sitting at 2932. The average volume is 5.25 million. Now, this is kind of like an experiential real estate investment trust. It's very diversified in a certain niche. Okay, it's mostly like casino and entertainment properties, like EPR properties. Market cap is 30.58 billion US dollars. Its year range is 2663 to 3405. Day range 2896 to 2934. Previous close 2926. Now, what really attracted me to them was their revenue and dividend history. So FFO is very strong, but I want to show you the jump in revenue and dividend history, which really attracted me to them. They're less than $30 right now. I'm going to make this clear. When I buy REITs, I want to see revenue trends that are increasing, because usually when the revenue goes up, the dividend goes up, and the board of directors have enough confidence to hike the dividend. So this is annual data in millions US dollars. 2017, 187, 2018, 897, 2019, 894, 2020, 1,225, 2021, 1,509, 2022, 2,600, 2023, 3,611. So that's a huge increase in revenue. Absolutely love that. I will show you the dividend history right now. I'm going to start in 2018. It's a quarterly dividend, 26 cents to 29 cents, 2019, 30 cents, 2020, 33 cents, 2021, 36 cents, 2022, 39 cents, and then 2023, 2024, 42 cents. So the dividend growth in 5 years is 8.62%. Number of dividend increases in the last 5 years is 5. You bought one share, you made 166 with a 5.66% dividend yield. I like the 3 to 5% dividend range. That's one of my big targets and things that attract me. And dividend growth is good, revenue is good, so that attracted me to them. So I'm going to be buying more. Let's jump to the next dividend stock or real estate investment trust. Now, what I like about Essential Properties Realty Trust, again, it's less than $30. At one point, it was beating the S&P 500 and hasn't recovered since the pandemic. So that's one thing that really attracts me. Now, again, I love dips. I always dollar cost average. That's one of the most effective things you can do. But when there's huge dips in the market, I'm buying dividend growth stocks or cheap dividend stocks or real estate investment trusts like this one. So the average volume 1.47 million. The market cap is 4.32 billion US dollars. Its year range is 2049 to 2677. Day range is 2522 to 2561. Previous close is 2547. So they're kind of like a mirror image of Realty Income and Agree Realty Corporation. So let's look into them a little bit more. So annually in millions US dollars, there hasn't been an increase in revenue, which really attracts me. So 2016, 15, 52, 2017, 54, 44, 2018, 96, 22, 2019, 139, 2020, 164, 2021, 230, 2022, 286, 2023, 359. So because of the increase in revenue, I've been very attracted to buying them, and I'm going to show you their dividend history. So check out the dividend growth in this. That's still not too bad for a real estate investment trust. So the one problem with real estate investment trust, if I earn $500 in dividend income with EPRT, I have to report that as $500 in dividend income with EPRT. So eventually, this is going to buy me dividend growth stocks. This is the purpose of buying a lot of these real estate investment trusts, to turbocharge my dividend portfolio, to focus on the final push. Now, I'm not buying any more dividend stocks. I'll reveal to you my final decision with what I'm doing, and now it's time to just start adding dividend stocks and focus on phase 1 to phase 2. Again, I'm going to be adding some of the Yieldmax ETFs to this dividend portfolio so I can turbocharge it and get it going, because remember, you don't want to yield chase. Eventually, dividend growth is going to overpower that, and that's what I'm hoping in the next 3 to 5 years, is the dividend growth overpowers my passive income from the Yieldmax ETFs. Yieldmax ETFs have been fantastic for using my passive income to buy dividend growth stocks. So 2019 quarterly dividend, 21 cents, 22 cents, 2020, 23 cents, 2021, 24 cents, 25 cents, 2022, 26 cents to 27 cents, 2023, 28 cents to 29 cents. So again, dividend growth in 5 years, 6.19%, but you're seeing a huge increase in revenue, which attracts me. Number of dividend increases in the last 5 years is 9. You bought one share, you made $1.14 with a 4.47% dividend yield. So again, 3 to 5% range, really love that. Again, over time, dividend growth stocks, Hershey's, McDonald's, Procter & Gamble, Starbucks, they're going to win. Kroger, they're going to win. So you have to be aware of that dividend growth will overpower the high yielders over time. But I like having a hybrid because you can do both. Now, some people are very aggressive with high yield dividend stocks. As long as the dividend's stable, you're in good shape. But I always believe in the tortoise and the hare. So right now, my high yielders, the hare is winning, and then the tortoise is going to win in the long run. The hare runs out of gas, it sleeps, and then the tortoise just sneaks in and wins. And that's what's going to happen with my dividend growth stocks And that's what will normally happen with your dividend growth stocks over high yield stocks. So if you're new to this YouTube channel, again, my material is free for you. Capitalize on it, see my investments, see what I'm making, and I provide my rationales as to why I buy REITs and dividend stocks. So this is all free for you. You guys take care and have a great Saturday. And I will jump to my disclaimer. I'm going to try to sneak one in on Sunday. Take care. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. Do not use it for any form of tax purposes. It is best to seek financial advice from a financial advisor or somebody certified to give financial advice. This YouTube is strictly for entertainment purposes only. Do not use this YouTube channel for tax purposes. Like I said, see somebody that is a tax advisor or somebody certified to give tax advice. This is strictly for entertainment purposes only, this YouTube channel. Investing is a big risk. You can gain money, you can lose money. So make sure you do your due diligence and be aware of your investments that you can lose money. You don't have to buy stocks or REITs because I buy them. This is my video log. This is my dividend investing journey. I'm very transparent for you. I made it to $100,000, but we'll see what happens because I want to keep on going. I'm very aggressive as a dividend investor at 38 years old. So you take care and have a great Saturday and enjoy the tournament matches.